Good afternoon, everybody. This is Harmeet from SuperPicks. Thank you for tuning in. And we're going to be looking at SPY QQQ and IWM. Just before we get started, just wanted to let you guys know that I've been working on my website. I haven't had much time to post, but hopefully we'll get these regularly out to you guys. As soon as if there is more time for me available. There is setting up a premium services for people to kind of go through all of my work if they would like to. It just kind of I think I think people could use some alternative way of looking at things, at least the way I think. And I think that whatever is out there, there's just so much noise out there. We can concentrate on looking at charts and just price action, and I think people will get a lot out of it. Okay, so I digress from that. Let's just get going. So let's the first chart we're looking at is SPY, and the last time we were here, it was almost a month ago or so, we were looking at this specific rise and the fact that it had gone over a major pivot, this 462 pivot. Okay, we were looking at this move down, and we were seeing that if comes in, kind of fills this gap, and seeing if this was truly a first wave of something larger, or was it still in a corrective mode. I guess at this point we have our answers, and we know what is happening. I just quickly want to point out a few things before we get going, since I haven't had any regular updates on this. It's just look at this, that this is, it went all the way up to 127 from the last X1 versus X2. Okay, and we can see that X2 versus W wave, this versus a W wave, which is over in the back. Let me quickly just kind of move it back for you guys. So W is all the way down here. Okay, so this W wave right here, let's just get the pen out so everybody can say this X2 compares to this W, and then there is X1, which I kind of took that away because we're not looking at that, we're way ahead at this point. So it just it's showing you how complex this correction has been, and for now there is no end in sight for now. So what we can do is just work with what we got. Okay, what we can kind of work out within the rules of Elliot Wave. And does that mean I have all these waves ending here and the fourth wave ending sometime soon, but I am hesitant to say or do anything about it because I'm not sure, obviously, and nobody else is, that how this correction will end, how this bear market will reverse, and so forth. So we'll leave that up to them, to the big guys, to figure that one out. We'll just follow the price action and go from there. So the structure right now that is forming is this ending diagonal type structure. Okay, and we don't know exactly how this fifth wave is going to end. Just to quickly point out that this has this massive momentum move, and we saw one today too. So just be aware of that these bear market moves are big and heavy and long. Now you could say that, couldn't this be the first wave right here, and second, and so forth, and third? The reason is that it's just, this can't be the second. Well, I guess this specifically can't be the second, just because how far this move comes down. Okay, I saw a bunch of people posting that online, so it can't be that. Just understand that these values and where they are matter, and how far up, relative to this last high, where we ended up. Okay, let me just quickly, let's look at this. Okay, so let's just get rid of this because I don't think that's pertinent anymore. So now we have our pivots. Now we have our uh, kind of know understand where we're going. Just have these values in mind. 429, 429. That's a big zone. Okay, it's a big weekly zone actually. And the last pivot of 408.57 becomes that much more important. Plus, this 405 is also very important because we had failures. Okay, we had gap up failure and then moved up again, and then it gapped down and took this value out. Okay, it gapped down below it. So this itself is a huge pivot. Okay, because just because we are seeing a lot of gap ups, we're seeing a lot of failures. We're seeing both ways, bullish and bearish. This is a bearish failure. This was a bullish failure, bearish failure, still ended up going up, and then a move down, gap and go from that area. So this makes this specific area a very important area to kind of have in mind. I am still looking at 385 right now as being a target of the short that I have on. I That does not mean it will go it will stop there. There are other values I'm looking at. For example, this 380 zone is pretty, it's a good place to also look for the short to end. And of course, that's 369 to 364 area is a big one. If we do end up getting there, if we don't find any sort of support at this area, okay, I will post some flow charts that I will try to keep. Kind of keep in handy and seeing what are the market, what are the big players doing in this area. I want to know because this will tell me if what kind of further how will it further develop from here. Can we from here, from this area, can we have, once we can take away all the puts and so forth, or the calls, depending on how people have been trading them, uh, bullish or bearish, and go into something more of a neutral strategy, such as iron condor and so forth, because we don't know exactly how this will develop. So we will find that out soon enough, I think. But the way markets are, they're very bearish. The inflation data coming out of UK was incredibly high. The moves that some of these retailers have seen, such as Target, Costco, they're just beyond two sigma moves. So just be aware that markets are punishing, and they're in distribution phase. Okay, they're not in a consolidation phase. We are not in a consolidation phase. So there is a difference between corrections that are there, distributive corrections and the consolidative corrections. Distributive corrections tend to be more in a bearish environment or in a bear cycle. We are in a bear cycle, and these have been very significant distribution moves that have been coming through and day in and day out. You've been hearing about inflows in such ETF inflows. They have been very large. Well, in order for the inflows to come in, somebody has to sell, those large amount of shares. And I think a lot of the big hedgies are pretty much the hedge funds, and the people that are more quantitatives understand the way things are, and we're just gonna follow them. And we are in a distribution phase. Okay, so SPY is in a distribution phase. Do expect, this move to end soon. Um, I think that, again, I think this area, this double bottom, we have to watch. There is also a huge $400 put open interest, okay, OI, that is expiring this week. Okay, so we want to keep an eye on that to make sure that we don't get a move up to 400, and if we do, that will be a nice little putting on some put credit spreads to kind of rail in some premium at that point. And that it's both in SPX and SPY. So just go ahead, look it up, and you will see the max pain is on the put side. So that kind of gives it. I think there will be a pause. I think there may be a small bounce and that is warranted from the move today, and I think then we can probably see and look for continuation from there on out, at least in SPY. Don't worry about where I have placed these values for now. Don't worry about them. Don't worry about the count, as what we are going to be mostly concerned with right now is how this move, this that looks like an ending diagonal move, will phase out. Okay, we have not confirmed that exactly is an ending diagonal, or is just this is part of a something larger. Third wave. Okay, so we don't know exactly. This third wave is not over here, it may be over here, so we don't know that yet. Okay, the reason I said it's an ending diagonal, because we have first wave that has this ABC structure. Okay, this A B C structure, and then A B and C. Okay, and then we're seeing the same kind of move up down here. It's not as prominent, but that's so pretty much in ending diagonals you should see 3 3 3 3 and 3. So these should be the three waves, three waves, three waves. This is your stereotypical ending diagonal, and that's what we're seeing. It's matching all the rules. You know, the third wave goes beyond the first wave, the fourth wave goes into the first wave, and so forth. And the fifth wave can be truncated, or it can go beyond 3. Okay, or it can be extended at this point. So a lot of the rules for ending diagonals are being met, but that does not mean that that is the end all say all. We don't know the extension of this move down. We will find out. It will kind of self-calibrate itself and let us know. But either way, we're in this move, which is moving down, and that's what we're gonna play. All right, so let's get to the next one. Which one is QQQ? Okay. QQQ is very interesting. The same thing. Just to quickly point out something that I think was really interesting that I haven't seen a lot of is these flat moves. This was a very stereotypical expanding flat, going beyond 100, 318, 26, just to kind of prove, and 317. So that what that says is the move, the B wave should exceed the magnitude of A wave, and we prove that. Okay, and the C wave should be impulsive and go beyond the A wave, and it should have a structure of 3 3 5, and all those were met. And so this was a good way of, something that you guys want to keep in back of your, or show off or whatever to your friends. Hey, look, there's something very unique happened that doesn't usually happen. Well, at least I haven't seen it a lot in the past so many, I don't know, 4 years or so there. So this correction is definitely very complex, and we'll go from there. I did put the 2 out all the way here. I think that this 257 level in the Qs is not out of the question. I think it can very well go there, and it may test there. So let's just quickly see how this goes. This whole impulsive structure is still in question. Okay, we're seeing how this will play out, because there's a few things you can also see that this could be 1, this could be 2, and we are in this more of a money wave 3. We don't know if this was the 4th or not, but anyway, the point being that whichever way you want to play it, the move that we are seeing right now has a stereotypical 5th wave structure, which is high momentum move down. The first wave and the 5th waves tend to be very, they tend to have this, capitulation, or like kind of let's get going kind of way of looking at it, where everybody jumps in, the big funds jump in at the first, or short squeeze happens if you're a bullish thing, but in bearish sides, you see these large moves down, and see the magnitude of these moves is great. So I am still concentrating anything and everything into this area right here, 283 to 270 area for now. Let's see how it portrays these. Just if you guys want to just keep these values in mind. Let's just say 283 278 and 275. So just be mindful of those. Also be mindful of this 272. And then hopefully if it still continues to go down, we can see that hopefully we'll get to 257. I think that would be, at that point, it would have lost about 30 to 40%, actually 38% from the highs, from 408 to 257. It's about 37% loss. I think that's a pretty significant correction, and we're still seeing these very large distributive volume bars. So this is not a consolidation again. We're in distribution phase, and the cues are still following that. Okay. The pivots again you want to look for are, the next pivot is obviously this low, but mostly a 283 level we want to watch and see how it will behave there. Okay, so let's go to IWM. Um, Same boat. Okay, we're in the fifth wave. That's the way I have it. That doesn't mean it is, it can't be broken down in any ways. And I think you guys should all look at different wave counts, because that's what your due diligence should be. Looking at all these different wave counts. Just only thing you have to kind of keep in mind is the fact that a lot of times people put these counts out. They may not be first correct. They have to prove that the wave count is correct, that it follows all the rules, and second, that it actually, syntax wise it is correct, but logically it may not. It may have some logical errors. I think a lot of computer scientists will understand that. You can run a program, but it can still have logic errors. Even though you have written it correctly with no errors, there are logic errors. But I digress from that. So the pivot that we want to look for, again, is that this 173 area for IWM, because we had this gap up right here, okay, from this symmetry, from 3-1 symmetry. Okay, we want to watch that. We also want to keep an eye on bounce back to 182.84, and we are in a B wave, so do expect some sort of correction and then move back down in the fifth wave. I think I am looking for it to complete this fourth wave. I'm not sure when it will happen. I will look for it to, the fourth wave could be, this could be very well, the 182 mark could be very well the end of the fourth wave, because it does again have this ABC structure already in there. Okay, and that is important too. So just be mindful of that this could be start of the fifth wave. We just need to prove it. Okay, and the proof comes when it goes beyond 168, or there is a truncation level that we can look at that is beyond 173.21. Okay, and if it gets beyond that, we are in a truncation zone where fifth wave can actually end, or go beyond this level, and we get to this 150 155 area and so forth. Let me just pull this over. So the areas, if it is a start or not, the areas that you want to look for in this specific, or have, take note of, obviously. So 173, like we discussed, 167, but we also really want to watch this 163, let's just say 164, 163 zone, because that is your major area where, at that point IWM gets into big trouble. That's what I would say. And then it opens up the door for 150 to be tested. So if it goes beyond that, I think the momentum can take it to 160, 159. So just be aware of that. That's more of a Wyckoff analysis, but just be aware of that. But this is something that I think we go and test within the next week or so, and we'll have our answer if this was the end of fourth and fifth, or if there is a corrective fourth, we're still in this corrective fourth from this downtrend. Okay, so we'll have those answers. This obviously the gaps do matter. I think filling this gap and going beyond that, we pretty much will start to have make get clues about what will happen from there on out. Okay, I hope this helps. Again, I am setting up a website. I think we're gonna keep it very, we'll keep it low price. There are going to be lots of charts, lots of counts, lots of different way of looking at things, and it is for education only. I probably won't be posting any trade ideas other than showing you guys what I think our pivot zones are, what it will be. Actually, I digress. I will probably post some trade ideas. I think it will be good to have something out there that people can follow along and learn from. So we'll see how this goes. It's been a hard work in coming, and it's pretty much set up almost, and we'll be going live soon. I hope really that everybody comes and joins. Thank you so much. I really do appreciate it. Let's just keep going and developing this count together, and hopefully some of you have different counts. I would love to check them out. I think having a different count and looking at different count is very, 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 very important. So just remember that even though this is my count, there are different counts out there. As long as they are logically and syntactically correct, I think you should be aware of them. Thank you very much, and have a great night. Bye bye.